Hey Fools, Austin Smith, editor at Fool.com, here to explain net income. Now, net income is a company's earnings or profit as reported on their income statement. It's the revenue minus all expenses, and it's often referred to as what you'll hear as the famous bottom line. It's what every investor is looking at. They want to know, how does this impact the bottom line? How does this flow down into what the company actually earns? Now, it's calculated by revenue minus all business costs, depreciation, interest, taxes, and other expenses. As we mentioned, it's found on the income statement, and it's one of the most important metrics in investing, but it's also one of the most easily manipulated. It's very important to remember that net income isn't cash. It's an accounting number. It's based on accrual accounting. So when you back out depreciation from your revenue, depreciation isn't actually a cash expense. It's something that happens over an extended period, but it doesn't actually impact how much money you have in the coffer. So it's important to look at net income. It's a very important number, but remember, you always have to take it with a grain of salt. Now take a company like Amazon, for example. Amazon appears to have very, very low net income, but that's because all of the money they collect, they very quickly spend and reinvest in themselves on capital expenditures. So in the last quarter, they had $13 billion in revenue, a huge top line, but only $7 million in net income, which seems like they're keeping very little, but that's because they're constantly spending on themselves. They spent $660 million in capital expenditures alone in the last quarter. Now, it's not unusual to see negative net income either. Young or growing companies like Facebook, Angie's List, and Mako Surgical will all typically have negative net income as they're spending for their growth and their top line hasn't filled out to what you expect it to be. Now, that's why here at The Motley Fool, we actually prefer to look at free cash flow because we believe it to be a more honest measure of a company's real ability to generate earnings for investors. Thanks for watching, and make sure you head over to Worldwide Invest Better Day for more foolish investing videos.